Those who joined late, missed the discussion, you will be able to do the recordings and everything I said. Now, the core area A, which is you can say job of the finance manager, role of the finance manager. As I said, we will be discussing as suggested by the institute at the end, but a basic discussion about finance. In any organization, in my organization, wherever you all are working, everywhere, accounts, finance, marketing, HR, IT, regulatory, so many areas are there. Different staff are there, different departments are there, different persons are there. What is the job of a finance person? Finance, managing finance. Somebody will ask me, sir, how you are managing your finance in the house? How you are managing your finance in your Saraf Academy? Means what? Paisa, money. From where the money will come? What are the options of getting the money? Where I am going to use my money? What are the opportunities where I can invest my money? That is called finance. Finance means paisa, rupiah, dollar, pound, whatever. So the person who is handling the finance job in the organization is managing money. From where the organization can get the money, from where they are getting the money, and where they can use that money. Where they can use that money. Source of finance, use of finance. If I will talk corporates, multinational companies and all that, the money is coming from two sources. One is funding, one is operations. Suppose in my company, operations, any student is joining the classes. He is making payment. He or she is making payment. So I am getting money by operations regularly in Saraf Academy. The other way, funding. Maybe I will be approaching a bank, asking for loan, financial institutions, issuing debentures, issuing shares, right shares, whatever. The funding will not be happening every day. The funding will happen maybe one time, two times in year or years. But that is the only source of finance to any organization in the world. Whether it's an entrepreneur, whether it's a corporate, whether it's a partnership, whether it's an LLP, any company. And where we are going to use the money. Again in two cases. In operations and in growth. Operations, payment of salary, rent, electricity, staff salary and all that. Growth, doing a new project. Purchasing plant and machinery. Land, building, plant, machinery. Or taking over another organization. If we are developing our own plant, machinery and all that, that is called organic expansion. If we are taking over another organization, then it is called inorganic expansion. But both are expansion. Again, the expansion will not be happening every day. It is not operational. Maybe one time, two times, three times in year or years. Depends. How much resources we have, where we need to utilize our money and all that. The growth of a business will be possible when they will invest. So job of a finance person is what? From where the money should be sourced and where the money should be utilized. Source of funds, application of funds. As a senior finance person, because the subject we are discussing what? CFO, senior finance manager. We are not discussing even the finance manager, senior finance manager, CFO. That's the area of the syllabus. That means under us, there are many working. There are many staff who are working. Those staff, those who are working, they are not less qualified. They are ACCA, they are CIMA, they are CIMA, they are Indian CA, they are whatever. They are professionals. In a proper organization, under the CFO and senior finance manager, the persons, those who are working, they are also qualified. They are also not normal BCom graduate. They are professionally qualified. So many work in an organization relating to finance cannot be managed by one man. It's a team. Finance and accounts department is one area in any organization. The accountants will record the transactions. will help in preparing financial statements, but those transactions will be arising by involvement of the finance person. The finance person will be helping the board members in taking correct decisions relating to finance. Now, in most of the organizations which are quite big, proper level, then under the CFO, under the senior finance manager, many times there are two persons. One is finance manager, one is treasury manager. In a bigger organization, we require these two persons separately because job is huge. It's not that a finance manager cannot do the job of treasury manager or a treasury manager cannot do the job of finance manager. They can, because they both have studied finance or knowledge of finance. But the area is different. Treasury job is more of a liaison. Liaison with the banks, with the customers, with the suppliers. You can say managing tax matters relating to finance only. Working capital management, cash management, receivables, inventory, how much we need to keep and all that. That is the job of the treasury. The finance manager job is to where the money should be invested. Investment decisions and source of funding also. Source of funding will be helped by the treasury also, because they are connecting with the bankers. They are doing the liaison job. They will also have. But that is a job of the finance manager. And if we have limited resources, every organization has limited resources, where the money should be invested, that is also the job of the finance manager. The treasury manager will help the finance manager to take the correct decision. And these two pillars, these two persons, these two will help the senior finance manager, CFO, to take the right decisions relating to finance. Whether we study ACCA, CIMA, CIMA, CPA, Indian CA, CWA, any course, finance तो finance ही रहेगा. Finance is never going to change. वो वैसे ही रहना है. So in any syllabus, what you will get? Source of funds, use of funds. In our AFM syllabus is also source of funds, use of funds, source of funds, debt, equity, cost of capital, capital structure, use of funds, organic, inorganic, organic investment appraisals, land, building, plant, machinery, inflow, outflow, NPV, IRR and all that. Inorganic, takeover, mergers, acquisitions, all this. And doing this finance function, we need to always manage the risk under control level. Because every type of opportunity cannot be exercised by any organization. So to manage the finance function, you require a good sound understanding of hedging techniques, which we say as derivative techniques, option, future, swaps and all that. Then we will be able to manage the finance function in the organization. Even in the smallest organization in Saraf Academy, hedging is done. Not that whatever I studied in the books, exactly that thing. But practically, in every organization relating to finance area or any business area, risk is there. The job of the finance manager is to manage the risk, is to control the risk within the acceptable level. Not taking risk is not advisable, because if you don't take risk, you will not be able to earn more. You will not be becoming competitive. For becoming competitive, for earning more, we need to take risk, calculative risk. The finance manager helps the organization in analyzing the risk and managing the risk at the proper level. That's the job of the finance department, finance function, finance manager, whatever we say. But you understand that if I will discuss source of finance, I need to discuss debt, equity, cost, capital structure. If I will discuss investment, I need to discuss what are the investment methods, NPV, IRR and all that, international investment. If I will discuss managing those risks, then I need to discuss option, future, swaps, so many. So this topic, that is the first topic, role of the finance person, finance manager in the organization, you or me cannot understand unless and until we go into detail of other topics. For that reason, it is written, advisable everywhere, that you do this later, once your other areas are complete. This is, you can say, a basic knowledge on finance function. Relating to this basic knowledge, I have written notes here. You can read once these notes. They are taken some from Google, some from Kaplan, some from here and there. But I have made already these notes. Maybe many of the things you will not be able to understand, but read once. Please, it's a request. What is the job of the finance manager, finance function, how it is managed, what is treasury and all that? A basic reading is advisable to all of you. Okay? I'm not going into reading whatever I have written as a stuff. Now, before moving to core area B and all that, as I said, first of all, we need to be technically slightly clear relating to certain things. You can say that time value of money calculations. Now, if it is a CMA students, I took extra classes to discuss the two classes basic calculation. If it is CIMA or ACCA student, you don't take tension कि आपको basic ध्यान नहीं है क्या है. $100 today and $100 after 1 year is not same. As per the syllabus, this is assumed that a student has the knowledge when they are studying CIMA F3, when they are studying ACCA AFM. And for CMA student, I have already taught them separately. But I am starting from basics only. So you don't have to take tension anybody. Sir, I have not studied for 7-8 years. आपको कोई टेंशन नहीं. आप केवल मेरी बात सुनिए, उसको फॉलो करिए, आपको सब समझ में आएगा. मैं बार बार ये बात बोल रहा हूं. $100 today and $100 after 1 year is not same. Why? If I have 100 rupees in my pocket today, I can purchase goods and services from that 100 rupees. I am in India, so I am talking about rupee INR. If I will have the same 100 rupees after 1 year, 100 INR after 1 year, I will not be able to purchase the same amount of goods and services with the same 100 INR after 1 year. Reason most important, inflation. In the practical world, if you are reading newspaper, news and all that slightly related, then inflation pressure is mounting in India and all over the world. Again, the inflation pressure is there. In US, so already inflation rate is very high. In India, RBI has not changed the interest rates, but still inflation rates is slightly high as compared to earlier. If suppose I will say that in India, inflation rate is approximately around 5%. So with 100 rupees today, 100 INR today, whatever goods and services I can purchase today, I require 105 rupees after 1 year to purchase the same goods and services. Because inflation is 5%. That means 100 rupees today is equal to 105 rupees after 1 year. Because with 100 INR, whatever goods and services I can purchase today, that much goods and services I will be able to purchase after 1 year for 105 INR. So today 100 rupees is equal to 105 rupees after 1 year, because 105 rupees after 1 year will give me the same goods and services which I will be getting now on 100 rupees. Suppose in 1 year there is no inflation. Somebody will say that, sir, it doesn't happen. Arey bhai, assume karna yaar. Ki suppose there is no inflation. Then to 100 rupees today, whatever goods and services, after 1 year, 100 rupees will give you same goods and services. 100 rupees today, 100 rupees after 1 year, same. No time value of money. But if I will be utilizing my 100 today to purchase goods and services now, I will be enjoying my goods and services for next 1 year. But suppose I am investing my 100 rupees in bank FD, in share market, in anywhere I am giving to Kajal, she will give me after 1 year. If the banks or any investment is giving you after 1 year 100 only, why I will give them my money 100 rupees now for 1 year? Why? Because I will be able to purchase the goods and services today, but I will be purchasing after 1 year because of the investment. So why I will sacrifice my enjoyment with the goods and services for 1 year if I will not be getting any return? Forget about inflation. If I will not get any return, why I will sacrifice my consumption feeling, good feeling and all that? So if there is no inflation, whenever you invest your money anywhere, you will get some return. 2%, 3%, 4%, 10%, whatever. This is called real return. A real return is not related with inflation. Wherever you will invest, you are sacrificing your consumption for future. You want some return. That is called real return. So if I am giving to Kajal 100 rupees, after 1 year I will not accept 100. Suppose after 1 year Kajal is giving me 103. So 100 rupees today is equal to 103 rupees after 1 year, not equal to 100, even though there is no inflation. And if inflation, then 100 rupees today is equal to 108 after 1 year, because 3% real return and 5% inflation, it is 108. Now if I will give money to Kajal, is there a guarantee that Kajal will return the money to me? If I am depositing in bank, is there a guarantee that bank will give me the money back along with return? If I am investing in share market, is there a guarantee that I will get the return? Everywhere risk is there. Everywhere risk. 100 rupees today in pocket, there is no risk. But 100 rupees after 1 year, there is a risk. Whether it will be there or not. For risk, we require risk premium. Why I will invest my money anywhere without any risk premium? The risk is different in different scenarios, in different places. But I want risk premium. So 100 rupees today, no risk. 100 rupees today, no real return. 100 rupees today, no question of inflation. But after some time, risk, inflation, real return, all the things are there. If I am doing a project, I am purchasing new tuition center, expanding my business, I will invest money now, say 5 crore, but I will be getting the income from the project, cash flows from the project. Not now, in 4, 5, 10, 15 years. But if I am investing 5 crore in the project, I will not be satisfied with 5 crore. I should be getting more than 5 crore. More than 5 crore, how much extra? What return I require? I require return, risk premium, inflation, a real return. There is no formula to calculate risk premium, real return and all that. That you need to decide how much risk is there, what premium. We will be discussing some formulas, but they are not formulas, they are basic concepts. But I mean to say that if I am investing 5 crore in a project and the project will be there for 5 years, 10 years, then I want greater than 5 crore. I want a return. Suppose the return is 10%. That return can be said as required rate of return. That can be said as cost of capital. That can be said as discount rate. Whatever you want to say, man. On my 5 crore, I want 10% return. The project will be for 5 years. Every year I will be getting cash flow. Suppose in 5 years I am getting a cash flow of 7 crore. 5 crore I am investing now and I will be getting cash flows in 5 years 7 crore. The project is of 5 years. Whether we should be doing the project, I can't say now. Because I need to check that 5 crore I have invested and I am getting 7 crore. Is I am getting 10% return or not? On 5 crore, 10% for 1 year is 50 lakh. It will become 5 lakh 50,000 in 1 year. Then 5 lakh 50 plus 10% again, 55 lakh. So 5 lakh 50 plus 55 is 6 crore 5 lakh. Then again 10% third year. 6 crore 5 lakh plus 10% will be 6.65 lakh. Then again 10% it is already going beyond 7 crore. That means the problem is that by investing 5 crore, I am getting 7 crore. I am not getting my return 10%. Because in 4 years only it should be greater than 7 crore. So 5 years so it is far higher. But that the question is that when I said I will be getting from the project 7 crore in 5 years, It's not that I am getting 7 crore in 5th year. I will be getting every year money from the project. I will be getting every year the cash flow. When I invested 5 crore today, suppose first year I got 20 lakh. First year I got 20 lakh. That means on 5 I should be getting 5.5 by first year. 20 lakh I have already received. Balance is left 5.3. Then again I will be adding the return 10%. Then again how much I am receiving? Ultimately what we want, that whatever 5 crore I am investing, in 5 years in the project, I should be getting my 5 crore back and I should be getting my 10% return. That we need to check. Whether it's an NPV, whether it's an IRR, whether it's whatever method, that's secondary. But the question is that wherever we are investing, if we will not get return, why we will invest? Otherwise, we should keep our money in Almira. Why we will invest anywhere? Why we will be doing fixed deposit in bank? Why? Why we should not be purchasing the goods and services now? Wherever we are investing, risk is there. We require return. A finance person need to understand this very, very well. And then when they understand this, they should be knowing very well how to calculate this. How to apply the basic calculations to take finance decision. Maybe a non-finance person, a doctor, a lawyer, anybody, don't have this much understanding because their area is different. But we will be helping them in taking the finance decision. Because a doctor also requires financial decision. Surplus money, where to invest. In share market, this, that. A doctor has made you can say a building, doctor chamber and all that. He want to open another. He want a finance person. Everybody requires finance knowledge to implement business, to do business. Even in managing our house, we require some basic knowledge of finance. The detailed knowledge is not possible, but some basic knowledge is required. Suppose year cash flow, year 0, investment 1,000. You take $1,000, 1,000 rupees, whatever. You take $1,000 million, 1,000 in thousands, whatever is there. First year, inflow will be 200. Second year, inflow will be 500. Third year, inflow will be 400. Fourth year, inflow will be 200. Fifth year, inflow will be 250. Hypothetically, I am saying. We need to understand how to calculate these cash flows. We will discuss. But before going into understanding how to calculate cash flows, the question is, the required rate of return is 10%. Whether the project should be accepted. Whether the project should be accepted. Now forget about calculator, forget about Excel or anything. Think as a normal common man that there is one person asking you, I am going to invest in a project 1,000, I am going to get 200, 500, 400, 200, 250 in 5 years, whether I should do the project. The total money we are getting 200 plus 500, 700, plus 400, 1100, plus 200, 1300, plus 250, 1550, which is greater than 1,000. The project should be done. But why we are investing 1,000 for 5 years if we don't get 10%? So we need to check what? That actually are we getting 10% return? So we say that we will calculate PV of inflows. PV of inflows means, just now I said 100 rupees, 100 INR today is not equal to 100 INR after 1 year. Because of inflation, because of real return, because of risk. Here that return is given 10%. The breakup of this 10% inflation, real risk, I don't know. But according to 10% means what? 100 today is equal to 110 after 1 year. 100 today is equal to 110 after 1 year. This 200 is after 1 year. So what is the value today? 1000 is the value today because I am investing now. 200 I will be getting after 1 year. But what is the value today when I am investing? So PV of inflows, what we will do? 200 divided by 1.1. If 100 becomes 110, 110 1 year later value today is 100. 100 by 110. 200, 200 into 100 by 110. So it is unitary method. 200 by 1.1. Plus, don't do any calculation. Just try to understand. Please, it's a request. Because itna deep calculation we don't have to do. But if we are not understanding the concept, we will not be able to solve any questions in the entire syllabus. 500 by 1.1 square. Why? Because 100 today. After 1 year it will become 110. After 2 years it will become 110 plus 10%, 121. So 121 after 2 years, value today is 100. 500 after 2 years, value today again 100 by 121. It is basically coming 1.1 square. Plus 400 by 1.1 cube. Plus 200 by 1.1 power 4. Plus 250 divided by 1.1 power 5. In finance, we always use a compound interest rule. In this 250, 5 years, every year 10% is included. I need to deduct 5 years 10%. In this 200, 4 years 10% is included. I need to deduct all those 4 years figures. In first year, only first year 10%. Second figure, 2 years 10%, and so on. This can be done very fast. 200 into. In the exam hall, any exam, ACCA, CIMA, CMA, every exam, CPA, Indian exam, every exam. I am talking about every exam. When you will be opening the study text, exam papers or anything, जब आप खोलोगे तो आपको एक टेबल दिया जाएगा. In every question paper the tables are there. On screen table. This is the table. Present value table. Interest rate is 10%. 1 year is 0.909. 0.826. 0.7. 10%. 1 year, 2 year, 3 year, 4. This table is given assuming $1 after 1 year. $1 after 1 year value today is $0.909. $1 after 2 year value today is 0.826. $1 after 3 year value today is 0.751. $1 after 4 year value today is 0.683. In this first figure, 1 year 10% deducted. In the second figure, 2 year 10% deducted. So we can say 0.909 plus 500 into 0.826 plus 400 into 0.751, 0.683, 0.751 plus 200 into 0.683 plus 250 into 0.621 into 0.621. If you are using a normal calculator, normal, no scientific, then what you need to do? 200 into 0.909, whatever is there, you will write. Then again in the calculator, you will write 500 into 0.826, whatever is the figure, you will write. You write in the here. 5 times you will do separate calculation, 5 different figures. And then you will add all those 5 figures separately in the calculator, then total. Even in the normal calculator, some shortcut is there, but I am not talking. But if you use scientific calculator, FX 991 MS, FX 100 MS, We can write this entire thing in the calculator screen. The calculator will be allow you to write 200 into 0.909 plus 500 into 0.826 and so on. It will allow you to write this also. But this is slightly lengthy. It is advisable to do this. If you are using a BA2 plus calculator, BA2 plus, then in that case, you will be writing interest rate. There is a symbol I, 10%. Then the second symbol is amount. You will write year 1, press amount 200. Year 2, press amount 500. Year 3, press amount 400 and so on. And then you will click PV. You will get the figure directly. If you are an ACCA students, then to far simple. You will just put the formula in the Excel sheet, and in the Excel sheet you will be able to get the figure in second. No calculator required. No calculator required. I am not going for the timing into calculation of this. Suppose this is coming. Suppose this is coming 990. I am writing suppose. This is not exact calculation. So whether we should do this project. If we are investing 1,000, 5 years, we are getting 1450. But when we are calculating present value, it is giving us 990. Should we accept this project? $990 means what? In total, we are getting 990 and 10%. Because why it is 990? From 1450, 10% income you have deducted. Or you can say that from 1450 minus 990, your income portion you have taken in your pocket. But the balance after deducting 10% is giving you 990, whereas your investment is 1,000. Your investment is 1,000, but you are not getting back your 1,000. If you are deducting 10% income, then you are getting against 1,000 only 990. That means we are saying that the project is not acceptable. Many persons says that NPV is 990 minus 1,000, which is minus 10. I'm not saying the exact figure is 990. I don't know, whatever may be. But if the 990 is there, then I will not do the project, because I want in the project 1,000 my principal back, my investment back, and 10% return. So when I'm deducting 10% return, then I'm not able to get my principal back. That means actually, return is less than 10%. We can say this also. Because if we are getting 990 and if suppose investment is 990, then we are getting 10%. But since we are getting 990 only, that means the actual return in the project is less than 10%. If suppose PV equals to 1,000 exact, then whether we should accept the project. If the PV is exactly 1,000, then whether we should accept the project. आविष्कार जी पढ़ाई नहीं हो रहा है यार. मैंने एग्जाम्पल दिया था आपको. आई सेड कि आई वॉन्ट टू पास इन द एग्जाम. आई पास्ड द एग्जाम, बट स्टिल आई एम अनहैप्पी. देन वाई आई सेट द टारगेट दैट आई वॉन्ट टू पास द एग्जाम? Why not I set the target that I want to score rank in the exam? When we are investing 1,000, we are getting back our 1,000, we are getting 10%, then what's the issue? Don't think here break-even story. Think here, if present value is 1,000, that means after getting 10%, you are getting your 1,000 investment back. Then what's the issue? अगर ठीक से नहीं पढ़ेंगे तो पूरा सिलेबस गड़बड़ हो जाएगा ई और बी. दिस वी हैव ऑलरेडी डिस्कस विद CMA स्टूडेंट्स, विद बच्चास, विद 12 पास आउट स्टूडेंट्स. मैंने ऑलरेडी 2 क्लास में ये डील किया था. और मैंने बोला था कि जब दिसंबर में क्लासेस करेंगे तो वो पढ़ के रखना है, नहीं करने से गड़बड़ है भाई, नहीं करना है ऐसा, प्लीज रिक्वेस्ट है। एनपीबी इज 1000 minus 1000, 0. Project should be accepted. Project should be accepted. NPB is 1000 minus 1000 means you are not getting 0, you are getting 10% and 1000 back. You are getting 10% and 1000 back. You want 10%, you get your 1000 investment back. Now what's the problem? In practical life, we don't do the project. Because if you are planning that you want to pass, you will not pass. You need to plan that I want to score more marks than pass, then always we will pass. If the project is saying that it is going to give me only 10%, I will not do the project. If the project will give me 11, 12%, then only I will do the project, because whatever cash flows we are forecasting, that the project will give 205. Who is saying that this is guarantee? Can you forecast with accuracy 100%? Can you become God that after 1 year how much you will get? No, not possible. So always in practical life the NPB should be positive. But in practical life, NPB should be positive. Even I will say that in exam, any exam, CMA, CIMA, ACCA, any exam, if the NPB is positive, then also project may be rejected. Because other than financials, other factors also to be considered. We will be discussing those factors. That is not involved in the calculation. Even though sometimes NPB is negative, then in exam and in practical life we will say project should be accepted. Other factors are there. The decision cannot be taken only on the basis of NPB positive income hua ki nahi hua. There are many other factors also which also to be taken into consideration to decide whether the project should be accepted or not. When I am discussing this, my objective is not here discussing NPB. My objective here to discuss calculations, because what I am saying, time value of money calculations, which is common, because whether the project should be accepted or not, that though we will discuss the entire topic. My focus is on calculations, and the institute assume that students knows the calculations. लेकिन स्टूडेंट्स को कैलकुलेशन नहीं मालूम है. मेरा एक्सपीरियंस बताता है कि इफ आई हैव टॉट इन दिस एडवांस फाइनेंशियल मैनेजमेंट सीमा F3, 99% स्टूडेंट डोंट नो कैलकुलेशन, एंड देन द प्रॉब्लम इज देयर, दे आर नॉट एबल टू सॉल्व द प्रॉब्लम. We will discuss payback and all that later. I have not discussed payback because I am also not discussing NPB also. NPB to I have just calculated to just give you some feeling. So I am not discussing NPB, IRR, payback, accounting rate of return. That we will discuss in the particular topic investment appraisal when I will start. My focus is only on understanding calculations. Now there are some calculations which will be involved. Those calculations need to be done by everybody in calculator. ACCA student can solve in the Excel. I'm not questioning. But still, those calculations is not simple to do calculations. What? Suppose in the above project, cash inflow every year for 5 years will be 300 per year. 300 per year. I said above that the cash flow first year, second year, third year, all different. But now I am saying that we will invest 1000 and we will be getting 300 every year for 5 years. I can do present value calculation the way I did, but I can do shortcut calculation. Present value of annuity. Annuity means when the cash flow are same every year. When the cash flow are same with the same gap, then it is called annuity. Then we can use 300 into annuity factor. What is annuity factor? If I will say 300 into 0.909 for first year plus 300 into 0.826, please understand here, these figures 200, 500 different figures, but 300 into 0.909 plus 300 into 0.826 plus 300 into 0.751 plus 300 into 0.683 plus 300 into 0.621. You will take 300 as a common, and in the bracket what you will write? 0.909 plus 0.826 plus 0.751 plus 0.683 plus 0.621. Basically 300 into all these 5 factors summation. 0.909 up till these 5 factors, if I will add, multiply by 300, I will get present value. But for that I can use annuity table. Annuity table is already giving me the combination. 0.909 plus 0.826. If the 2-year figures are same, the value is 0.1736. Means what? $1 after 1 year, $1 after 2 years, $2. The value today is 1.736. $1 every year for 3 years. The value today is 2.487. This is just, they have added the present value factor here. So this is 3.791. So it is, in case of annuity, we can see 3.791. In calculator, normal calculator also you will do this. Scientific calculator also you will do this. So this calculation can be done with the normal calculator also. You don't require scientific calculator specifically when the figures are same. You will just see the table, multiply with the table annuity factor, you will get the value. $1, $1 every year for 5 years. Value today is 3.791. So 300, 300, 300 every year for 5 years. Value today is 300 into 3.791. Suppose in the above example, from 6th year onwards, cash flow 150 every year forever. What I am saying that in the example, first of all, I took first year, second year, third year cash flows different. Then I took the example that first year, second year, third year, the figures are 300, 300, 300 same. In both the example, I assume that the project is of 5 years. But now I am saying that this project is not of 5 years. This project has infinity life. And from 6th year onwards, we will be getting 150, 150, 150 forever. We are investing 1000 now. For 5 years, we will get cash flow. From 6th year also, we will get cash flow, but that is 150 every year forever. Now for first 5 years, whether it is different figures, 200, 400, then the first calculation. For first 5 years, if it is 300 every year, then the second calculation. But in both the calculation, I need to incorporate this extra portion. That in the project from the 6th year, we will be getting 150 every year. Can we say 150 is an annuity? Can we say 150 is an annuity? No. Then what I said for the annuity? I said annuity means same amount every year. Same amount with same gap. Did I said that the annuity need to be for a certain number of years? Here also 150 every year. Same amount every time. So why it is not an annuity, Mubasir sir? An annuity which will continue forever in technical language called perpetuity. But this is annuity. An annuity which will continue forever is called perpetuity. But this is an annuity. For annuity, amounts should be same, gaps should be same. 150 each, same gap each every year, 6, 7, 8, 9, 10, 11, 12. But it is annuity. The technical meaning for annuity which will continue forever, it is said as perpetuity. Perp. But it is an annuity. For present value of perpetuity. For present value of perpetuity, the formula is 150 divided by 10%. You will see how this formula is derived by arithmetic progression and geometric progression. We are not studying mathematics, not required also. Neither in practical life, neither in exam. Why this is the formula? Just the logic you need to apply. 150 every year forever. So we are saying the present value is 150 divided by 10%, which is coming how much? 1500. We are saying if somebody will be giving me, or in a project I am getting 150, 150, 150 forever, then the value is 1500. But 150 10 times is becoming 1500. 11th time to it is free. There are 2-3 things here. If any cash flow which is very far, the value today is laddu. Actually laddu. Because if somebody will tell you, I will give you after 50 years, I will not be alive here. I am already 47. थोड़ी ना 97 years जिएंगे और जीना भी नहीं है यार. So normally, the cash flow which are very, very far, you are not getting anything. The second thing, if I am giving 1500 now to Aviskar, I am giving 1500 to Aviskar, and Aviskar is telling me, sir, I will give you 150, 150, 150 forever. आप मेरे को 1500 दीजिए, मैं आपको 150, 150 हर साल दूंगा, जन्म भर, till the time, sir, you will alive. I said, okay. So Aviskar will be giving me against 1500, 150, 10 times, 10 years. Then my 1500 which I am giving to Aviskar now, I will be getting back in 10 years. No return in 10 years. Because 1500 I am giving to Aviskar now. And in 10 years he will give me 150, 150, 150, 150 in 10 years. So 10 years tak I am not getting any return. 11th year, when he will be giving me 150, then first time I am getting income. Up till 10 years, so I will be getting my principal only. हो सकता है 10 year I will go to God. तो आविष्कार को तो 1500 भी नहीं देना पड़ा. आविष्कार even not required to give me 1500 also, because already gone to God. The question is that this formula is based on calculation, arithmetic, geometric progression. But we as a finance person need to understand why this value is present value so low. Because very long cash flow, and if it's a perpetuity, up till so many years, you will be getting that principal only. After that, you will start getting return. अगर कोई बैंक आपको interest rate, banks are giving interest rate on FD 6%, 6.5%. I will deposit 1000. Bank will give me for whole life 6%. No problem. Because bank will invest that 100 at greater than 6%. Somebody is giving you return, then obviously he is going to earn more than that. Banks, we borrow also, we invest also. If we invest in bank, bank will give 6-7%. If we borrow from bank, bank will charge 8, 9, 10, 11, 12, whatever. Because for bank, business is what? Lending money and getting money. Giving money in advance, getting money in advance. So bank will give lower interest, will get higher interest. That is the business of the bank. If you are going for buying vegetables in the market in the morning, if you are buying potato, say 20 rupees per kg, the potato wala purchased it at 18 or 17. Can you purchase at 18? You will become potato wala, because that is his business. So for bank, the business is what? Giving and taking money. So when they will be giving interest, they will give less. When they will be taking interest, they will be taking more. That is their income. But I mean to say that whenever, if any cash flow will be forever, then the present value is cash flow divided by interest rates. There is no table for this. Whether you are using Excel, whether you are using scientific calculator, normal calculator, BA2 plus calculator, every student need to do this. That to anybody can do. But we are getting PV at 5th year. That's the most important thing everybody need to understand. When I am doing 200 into this, where I am getting? 0. This 200 is at which period? This 200 is at first year. 200 by 1.1 or 200 into 0.909 is giving me at 0. 500 is at second year. If I will do 500 by 1.1, like 200 I will do 500 by 1.1, then I will be getting 500 value from second year to first year. I can do 500 by 1.1 once and then again divided by 1.1, then I will get at 0. 400 by 1.1 I will get at second year. 400 by 1.1 square, first year. 400 by 1.1 cube, 3 years back. Similarly, if I would be telling you 150 every year from first year, 150 every year from first year, second year, third year, fourth year, fifth year, sixth year, forever. 150 every year from first year, then 1500 each at 0. This 150 each from which year? From 6th year. 150 we are going to get from 6th year. Whenever we will apply the present value, it will be giving you value just 1 year back. 150 divided by 10%, 1500 is the value at 5th year, is the value not at 0. The perpetuity is not starting from first year. The perpetuity is starting from 6th year. So when the perpetuity is starting from 6th year, you are doing 150 by 10%. Then 1500 is present value. But this is the present value at 5th year. Why? Because the cash flow is of 6th year. This is the 6th year cash flow. So we will be getting value at 5th year. PV at 0. 1500 divided by 1.1 to the power 5, or 1500 into the 5-year disc. Not an annuity factor is gone. One single figure 1500 you need to bring 5 years back. That is 0.621. 5-year discounting factor 0.621. 1500 plus 0.6, 1500 is annuity, perpetuity, present value, but at 5th year. From 5th year to 0, 1500 into 0.621. Whatever will come. 900 approx. 900 approx. There are two portions of calculation. One is perpetuity and the second is present value. If the annuity arises from first year, here the annuity arises 300 from first year. 300 first year, second year, third year, fourth year onwards. So you are getting value at 0 because 300 starts from first year. Here also if I will say 150 from first year, then 1500 is at 0. But 1500 is from 6th year. So to bring it at 0, double calculation. First of all, perpetuity. Amount divided by interest rate. The amount is starting from 6th year. So you are getting the present value at 5th year. Then from 5th year to 0, you need to discount further 5 years. There is a double calculation involved. In so many chapters, investment, appraisal, mergers, takeovers, in forex, everywhere, you will be getting these types of calculations. These calculations, whether you are using Excel, whether you are using BA2 plus calculator, whether you are using normal scientific calculator, anything. ये जानना जरूरी है because this cannot be solved directly in the Excel. Unless and until I don't know the proper calculation, I will not be able to do the calculations. And then what problem happens? For the calculation, student will not fail. They will still pass. But when they will see the solution, and then they will be disturbing themselves, they will be continuously disturbed, I will be disturbed then again. And this is there with every student, believe me. Sabhi log, there are so many students who are CA, CW and all that, but they don't know the calculations. The question is not that can I use calculator, BA2 plus Excel. बात उसका नहीं है. बात है concept. When the concept is there and you will practice, the problem will not be there. The practice need to be there. Again, suppose in the above example, I am not discussing investment appraisal. I am not discussing NPV, IRR, payback, accounting rate of return. That I will discuss in the chapter. But for any chapter, these are the basics. Whether I will do core area B, C, D, E, whatever. Whether I will study for CMA US Part E, Part B, whether I will study for CIMA, E3, P3, these calculations are basics. We need to be 100% sure in the calculations, then we can start discussing the chapter, discussing the knowledge. Suppose in the above example, from 6th year, we will get 150, which will increase every year at the rate of 2%. So what we are saying? In the previous example, I said 150 every year. Annuity. Now this is not annuity. Here 156th year. 7th year is what? 150 plus 2%. 8th year is what? 6th year 150. 7th year 150 plus 2%. 8th year 150 plus 2% plus 2%, blah blah blah. And this is also forever. This is also forever. This is not that for 1 year or 2 years. This is forever. But this is not annuity. This is not annuity. This is a cash flow which will be there forever. But it is not an annuity. Now there is no table for calculating present value of this. No table. PV of a cash flow which is growing at a certain rate forever. PV of a cash flow which is growing at a, not certain, at a constant rate. Matlab 2% need to be same. If I will say that 2% for 7th year, 8th year 3%, 9th year 2.5, then there is no formula. Then actually what you need to do? You need to calculate all the cash flow for every year like this, and you will calculate separate present value. But if it is a cash flow which is growing at a constant rate, then the cash flow divided by interest rate minus growth rate. The cash flow is 150 divided by 10% minus 2%. The cash flow is 150. Earlier we did 150 by 10%. Now we are doing 150 by 10 minus 2. 150 divided by 8%. Again, the proof of the formula is there, which is quite lengthy. By geometric progression, the proof can be found out. but we are not mathematician. I am not going into that, not required also. But ultimately when you apply pure mathematics, then it will give you the formula that cash flow divided by interest rate minus growth rate. How much it will come? 150 by 8%. 150 by 8%. How much it will come? 150 by 8%. 1875 at 5th year. Why? Why at 5th year? Because 150 at 6th year. The same question is still there. When 150 was same, that 150 was arising from 6th year. Similarly, 150 is arising from 6th year. When this cash flow is of 1st year, then the value is at 0. When this cash flow is of 6th year, then the value is at 1 year back, that is just 5th year. Which is in entire present value calculation, the concept is there. Present value at 0. 1875 into point 621. 1875 into 0.621. 1875 into 0.621. Just that the story is different. In the earlier, it was annuity, amount every year same. Now it is not annuity. Now it is an amount which will be growing at the same rate every year forever. Then in that case, present value calculation. If in the previous example 150 for certain years, if in this example growth 2% for certain years, you can't do the way I have done. Another example. Totally different example. Okay? Not taking the earlier data into consideration. Year. Cash flow. First year, nil. Second year, nil. Third year, 200. 4 year, 400. Fifth year, 300. Sixth year, 300. Seventh year, 300. Eighth year, 300. Ninth year, 300. 10th year, 300 plus 2% per annum for ever. Present value at the rate of 10% today. Present value at the rate of 10% today. What I am saying? I am not saying what is the investment in the project, because I am not discussing NPV, IRR and all that. I am just discussing the calculation. The first year we will be getting laddu. Second year laddu. Third year 200. Fourth year 400. Fifth year 300. Sixth year 300. Seventh year 300. Eighth year 300. Ninth year 300. And then 10th year onwards 300 plus 2%, 10, 11, 12, 13, 14, ever, forever. Who will tell me the present value? You apply whatever brain you have, Excel, whatever you want to use. Say me the present value. Everybody has to say. Aviskar, Harsa, Kajal, Mubasisir, Rishabh, Sachin, everybody need to say. Till the time everybody will not say, I will not proceed. We will check. This is said by Rishabh. So Rishabh 2790. Okay. Then others. Wrong or right? No tension, because many of you will be saying wrong, but once we do wrong, then only we will be able to do correct in life. If we are not trying so that we will be doing wrong, then never we will be able to do correct. And the entire syllabus involves these calculations. One 1994 Kajal. Kajal 1994. Then one 1318.216. Aviskar 1318. Points I am ignoring. Then Mubasir 1528. Then nobody is saying the same figure. Which one is right or wrong, that's a secondary thing. But you understand, nobody is saying the same figure. Everybody is saying different figure. Whereas we all understand answer is only one figure. तो प्रॉब्लम क्या होता है कि व्हेन वी सॉल्व द क्वेश्चंस, जब बेसिक्स मालूम ही नहीं है तो क्वेश्चन में और माथा खराब होता है. तो स्टूडेंट इज ऑलरेडी पजल्ड एंड देन दे पजल्ड अस ऑल्सो. 1296 तुषार 1296. ओके. सचिन 2646. Sachin 2646. Then Harsa, Sneha, Saurabh Ghosh Dastidar, Saurabh Gupta, Harsa, Sneha, both Saurabh. Will you four say? So we are proceeding भाई, और रुक नहीं सकते. Present value. For first 2 years there is no figure, and then third year 200, 400 is a different figure. Then 300, 1, 2, 3, 4, 5 times there is an annuity. 200 is third year, 400 is fourth year. So 200 into third year discounting factor, third year discounting factor 0.751, 0.751 plus 400 into fourth year discounting factor 0.683, 0.683 plus no problem, sir. Now 300 into, now this 300 is annuity. So I can use annuity factor. 300 is annuity for 5 times. Annuity factor for 5 times is 3.791. 3.791. But the annuity is starting, 300 is starting from which year? From 5th year. If this would be starting from 1st year, I would be getting value at 0. But since this is starting from 5th year, 5th, 6th, 7, 8, 9, 5 figures, I am getting value at 4 year. From where the cash flow starts, you will be getting value 1 year back. So discounting factor of 4 year, that is 0.683. You can do separate calculation also. 300 5th year discounting factor, 6th year, the whole 300 value will be coming this only. That will not be different. Then plus 300 into 1.02, because from 10th year we will be getting 300 plus 2%. 300 plus 2% divided by 10% minus 2%. Why? Because it will be growing at the rate of 2% forever. But then into, from where this 300 starts, 300 into 1.02 from where? 10th year. This is from 10th year. 300 into 1.02 is 10th year figure. So when you are doing 10% minus 2%, it is 9th year. 9 year back. For 9 year back, 9 year discounting factor 0.424, 0.424, 0.424. 200 into 0.751 third year to 0. 400 into 0.683 at 0. 300 into 3.791 not at 0. 300 from 5th year getting at 4th year. 4 year back 0.683. Then 300 into 1.02 is 10th year figure. So it is coming at 9th year. 9 year back. So it is giving 2822. किसने सही बोला था भाई? Who said correct? Nobody. Maybe 2790 is because of approximation, but that is nearest, और सब तो जरूर wrong है. Maybe Rishabh, you have done correct calculation, because whenever we are doing the calculation, slightly the figures will be here and there. थोड़ा बहुत इधर उधर आएगा because of approximation. I am using the table figure. The table figure is in 3 decimal places. Yes, so maybe you are correct. Because when we are using the table is giving you figures in 3 decimal places. There are many tables where it is 4 decimal places with calculator further approximation. So it is just approximation error, because 2800 approx. I can say 2800 approx. Question is not that whether Rishabh your calculation is correct, others are wrong. The question is that everybody need to understand the concept. The problem is not of the calculator or Excel. Believe me. When a student purchase new calculator, they say, sir, I don't know. You start working on calculator automatically. Nobody need to teach you. Nobody. Question calculator का नहीं है. Question है कि क्या हम लोग चीज को समझ रहे हैं कि नहीं. अगर हम समझ रहे हैं तो ठीक है, नहीं तो गड़बड़ है भाई. Because if we don't understand in the entire syllabus, continuously the calculations will be involved, which involves present value calculation. I am not discussing NPV, IRR, payback and all that. That I will discuss in investment appraisal chapter. I am discussing just what? How to calculate present value. I am just discussing that only. Whether we do investment appraisal, whether we do mergers acquisition, whether we do derivative, कुछ भी करेंगे सब जगह present value calculation will be there. Everywhere in the entire syllabus. Another example. In this example, I am not asking you to solve now. This will remain homework. You will be solving in your free time. But before day after tomorrow, Wednesday class, you need to submit your answer in the Word file. Another example. Year cash flow. First year 200. Second year 200 plus 5%. Third year 200 plus 5% plus 8%. Fourth year 200 plus 5% plus 8% plus 12%. Fifth year. Fourth year figure. Sixth year. Fourth year figure. Seventh year. Fourth year figure. That means whatever is fourth year figure, that is same figure is there 4, 5, 6, 8 year. Seventh year figure plus 2%. Ninth year. Eighth year figure plus 2%. 10th year. 9th year figure forever, every year. Discount rate 8%. That means present value need to be calculated at the rate of 8%. Whether in any question this much cumbersome calculation we will get? Nowhere. The question is not that what calculation you will be getting in which question. But any of these calculations will be there in any question. So when our understanding is not there, then we puzzled by seeing the solution, this, that and all that. So the question is not that this much calculation will be there. The question is only of concept. क्वेश्चन ये नहीं हो रहा है कि ये कैलकुलेशन एग्जाम में आएगा कि नहीं. When I am a finance person, you are a finance person, and anywhere, if I cannot solve this, then who will be able to solve? When a finance specialist can't able to solve something, then who will be able to solve in the world? With the Excel, with the calculator, we will be getting slightly different figure always. तो आपने Excel use किया चलेगा, no issue. Anybody want to use Excel can use, but I just want the correct. Because आप Excel use करके भी अगर concept if not there, you will not be able to calculate correct figure. Question यहाँ Excel calculator का नहीं है, question knowledge का है, knowledge. Okay? Present value at 0. That I want. Now proceeding further. Conversion of one currency to another currency. In the exam, the questions will be there such currencies which we have never heard the name also. Every country's currency has a different currency. But whenever anybody in India or we will talk dollar INR, we will be able to understand very fast that $1 value in the market approximately 75 INR. $1 value in the market approximately 75 INR. So $100 is equal to 100 into 75. $1 75 INR. So $100 100 into 75 INR. Or I will say 100 rupees into dollar. 100 rupees is equal to how many dollar? Obviously everybody will say 100 by 75. That we are able to say because nobody need to explain us. That we are able to say because we know this. But when the questions will be there in exams on different currencies, then it creates huge problem. Whether it's investment appraisal, whether it's source of funding, whether it's mergers, acquisitions, whether it's derivative, conversion of one currency into another currency will be there in the entire syllabus. From beginning only, our basics should be clear. $1 at here, $1 equals to 75 INR. If the question is saying like this, very well. But the question can say dollar per INR 75. Question can say INR per dollar 75. The question can say dollar per INR 75, INR per dollar 75. But if the question is not saying this, the problem arises that whether it is value of $1 in INR, whether it is a value of $1 in INR or whether it is value of 1 INR in dollar. अभी तो हम लोग we know already कि $1 is 75 INR, you know. But if in the exam the question is saying A dollar to B dollar 75, whether it is 1 A dollar is equal to 75 B dollar or whether it is 1 B dollar is equal to 75 A dollar, that we need to understand. I will say problem remaining silent. Silent means they are just giving you this or this. They are not saying you anything. Now you need to interpret whether it is value of $1 75 INR or whether it is 1 INR $75. Problem remaining silent. We will presume. Presume means no assumption. You can't assume anything else. We will presume it is value of 1 unit of numerator in terms of denominator. Problem remaining silent. Please understand, many times, million times a student has asked question कि सर ये लोग ऐसे लिखे हैं और फिर भी ये लोग माने हैं कि $1 is equal to 75 INR. Here I am assuming that only because I have written $1 in the denominator. What I am saying? Problem remaining silent. When they will say INR per dollar 75, they will mention you. They will mention you what? They will mention you $1 equals to INR 75. Or they will mention you in the bracket that it is value of $1. But when they are giving you the question like this, they don't have to mention. It is presumed that it is value of $1 in terms of INR. This is we called value of dollar in terms of INR. Value of dollar in terms of INR. We say this is value of dollar in terms of INR because the questions will be giving you the same thing in different language. And English is a funny language, you already know. It is very simple to say $1 is equal to 75 INR, but they will be writing like this or not writing anything. They will be saying that rate is 75. That is a value of dollar in terms of INR, like that, whatever they can write. But what is the assumption in solving the question? What is the assumption in solving the questions? Problem remaining silent. Problem remaining silent. We will presume, not assumption, presume. We will presume it is value of 1 unit of numerator in terms of denominator. It is value of $1, 75 INR. It is value of 1 INR, $75. If I will not write this in the bracket, then it is value of 1 INR, $75. Base currency. Base currency is that currency which is 1 unit. Whatever way the rates are given, we need to identify in any question which is the base currency. 1 unit. Here in this entire example, I am saying $1. Base currency is that currency which is 1 unit. If base currency converted into other currency, multiply, and if other currency converted into base currency, divide. This you all need to remember for whole life, not only for exam, in the practical life also. If the base currency is converted into other currency, if the base currency is converted into other currency, if the base currency is converted into other currency, multiply. And if other currency converted into base currency, divide. Other currency converted into base currency, divide. Means what? Here the base currency, whether it is written like this, written like this, written like this, whatever we written, it is value of $1 everywhere. I am saying base currency 1 unit is $1. So if I will convert dollar into INR, $100, $500, $5,000, I will multiply with 75. But if I will convert 5,000 INR into dollar, I will divide by 75. You need to identify in every question which one is the base currency. If you identify which one is the base currency, to convert it into other currency, multiply with the rate of exchange. If you identify the other base currency, but they are asking convert other currency into base currency, you need to divide. Now please understand that in this rate, I can convert dollar to INR, INR to dollar. But I can't convert Great Britain pound, GBP, sterling pound into INR. For that, what I want? The GBP and INR rate. Similarly, GBP converted into dollar. What I want? GBP dollar rate. Every rate of exchange will be between two currency. Two currency is the basis for giving the rate of exchange. So with the rate of exchange, you can convert one currency into another. Suppose in the market, dollar GBP rate is there and dollar INR rate is there. In the market, GBP INR rate is not there. Suppose not there. But I need to convert GBP into INR. What I will do? First of all, I will convert GBP into dollar. Then I will convert dollar into INR. Possible. There are many currencies which are not so famous. Generally with every currency, dollar rate is there in the market. With any currency of the world, the dollar rate is there. So you can convert that currency into dollar. And then the dollar can be converted into any currency of the world. Many times in the market, for every currency, exchange rates are not there. Nobody is buying and selling that currency. But against one currency, dollar rate is always there. So in practical life also, organizations are doing import, export, this, that. They are converting their currency into dollar and then dollar into another currency. That means there is a double transaction required. Converting GBP into dollar and then dollar into INR. Both the times what you need to think. For converting GBP into INR, both the times you need to think only this line. When you are converting GBP into dollar, whatever the rate is given, which one is the base currency? Because depends upon that, GBP will be multiplied or divided to give you dollar. And then dollar INR rate, depending upon which one is the base currency, that dollar will be converted into INR. Maybe it is simple, but again, 100%, I will say in this. Here though, as I said, some of the students able to do correct calculations. But यहाँ पर 100% student गलत करते हैं. 100%. It's not 99. When converting one currency into another currency, they confuse. Reason is not because of the sum, because the concept is not clear. And in your entire syllabus, everywhere, conversion of one currency into another currency will be there. For CMA student, this is less important because questions based on conversion of foreign currency are very less. But still, if you can say, out of 100 questions, one question they are always asking. So conversion agar nahi aata hai, then in that case, we will not be able to answer that. For CIMA and ACCA, it's important because everywhere conversion is there. Relating to this, I will be discussing further in the next class. Because I will be giving rate of different currency. We will be taking some examples, converting one currency into another. Then I will be giving one example in the class. You all will be solving. Then we will be proceeding to the chapters. But it is not possible to give examples now and to discuss that at length. So we will be taking in the next class around 1.5 hours to still discuss the basics. And then we will be starting our chapter-based study. Okay? For the time being, anybody has any question to ask? This document will not be available on Google Drive because if I will upload on Google Drive, next day I will again write this. So this I will be mailing after the class to every student. Once the class is over, I will be writing in the mail class slides up till first class. So you will be getting after the class, every class, this thing. But the previous class materials are there in the Google Drive. The previous batch material. And believe me, the previous batch, whatever I taught in the first class, the previous batch, the same thing I am teaching. Obviously, example, comma, full stop cannot be same. How I will remember? But the previous class, entire story, what I taught in the first class, the same thing I am teaching. No difference, nothing. So if somebody had joined for 6 months back, if he would have done at least one class only, then all the things are taught in the previous class. So before leaving, what is the way of study for everybody? Whether you are a champion, whether you are an average, whether you are a below average student. When the class is over, I'm not writing this, I always write in every batch. When the class is over, you need to do the recordings of the same class again. Whether you are a champion, world rank, first rank holder, then also need to do the recording again. When you do the recording again, don't write anything. Do the recording again, like you have done the live class now. After completing the recordings, you should be, after the recording is complete, same the solved thing, same story, same questions on your own, in your separate seat, in your Word file. Solve the same thing again. Those questions which I have not asked, which I have solved all the things. After solving all the things, doing all the things, reading the notes and everything, make your own notes. Own notes means don't copy this from here to your notes. Don't copy from Kaplan, VPP, anything. What you have understood by doing that class. Today, I have given only one homework. Other than that, that is present value calculation. But normally in every class, then you will be solving other questions which are homework. For any question, once you solve, don't see the solution. All the solutions are there. But don't see the solution solve on your own. After solving, see the solutions in the back. See the solutions in the back. By looking at solutions, you will be able to understand what mistake you are doing. Still you are not able to understand what mistake you are doing. Then copy the question in your sheet, in your Word file. Copy your answer in the Word file. Copy the institute answer in the Word file. Send that file to me before the class. Whether you are there in the class or not doesn't matter. I will correlate, your mail is there, I will open your sheet and I will discuss that at length in the class. If somebody missed the live class, recording double time. Because when you have done the live class, one time done. But if you miss the live class, first you do the recording, again do the same recording, then do the same thing on your own, then make your notes, then solve the questions which is not solved in the class, and then sit for the next class. That should be done. Maybe suppose Monday we have taken the class, by Wednesday you are very busy, maybe. But next Monday to busy nahi hai, tab to time milega. Then in that case, by that much time you should have covered that. If anybody will follow this type of strategy of study, my guarantee you will not have any doubt left. My guarantee. And if you have joined the live now, but you will not be able to continue live classes, don't focus on the live class. The previous batch recording is the same thing is there. There is nothing, no change. Focus on the previous batch recording. Follow your own strategy. Why to follow mix and match, this live, that old, not required. Anybody who cannot attend the live classes because of any reason, just follow the old recordings. Don't follow this one. When I will take new batch, I will say the same thing. Follow this recording to them, or they should attend the live class. I am always live for every batch, for everything. There is no tension. But if you are not able to attend the live classes, then do the recordings of the previous batch. If you follow this, no problem will arise in life. It's my guarantee. I am saying my experience of 30 years. Whether it's a face-to-face class in the classroom, whether it's an online class, the same process need to be followed. Okay? So leaving for all of you, all the very best for your this subject to all of you, and study as per my instructions. Believe me, everything will be fine. Thank you to all of you. Take care.